Hey, good morning. This is Henry. It is 4:13 a.m. 24th of July 2009. In about 17 minutes, we're gonna get the prelim GDP number, quarter on quarter, coming out from UK. The number is expected to be a negative 0.3%, and the previous release was a negative 2.4%. This number is released basically on a quarterly basis. We get the prelim, the revised, and the final, and you get it once a month. So basically July we're gonna get the prelim, and August will be the revised, and September will be the final, and then in October we get the prelim again, and this will be the prelim for the second quarter. Basically, with the first release of GDP, usually we'll see more of a market reaction because it has a more possibility of deviation due to it's the first look of the GDP. So a lot of investors and speculators look at especially the first release. If the number comes out deviating substantially from the release, from the consensus, we could see a lot of market volatility. So in about 15 minutes we're gonna get the number, and taking a look at the pound dollar, we started the day trading roughly around the 164.70 area. It went as high as 165.40, and now we're just above the 16500. So it's been a pretty tight range before the news release, and we're just seeing the market gaining about 30 pips, starting gaining about 30 pips against the dollar. So really not much of market sentiment. So what we'll do is we'll wait for the number to come out in about 15 minutes. We'll look at the market reaction, and then we'll decide if there's a safe entry to trade the release. Now what we're going to be looking for is at least a negative 0.2% or a positive 0.4%. Since number that we're looking for is negative 0.3, if we get a positive number, I think that would be a very bullish signal, showing that the second quarter contraction of UK economy has been pairing off compared to the first quarter contraction. So it would be a pretty strong signal, and then we will see the sterling appreciating and against other major currencies. Now if the number is more negative by at least a negative 2%, giving us a negative 5% of release, then we'll be looking to sell the sterling. So the trigger is going to be either a positive 0.4 or a negative 0.2, and the release numbers, the releases that we're looking for is a positive 0.1% release number or a negative 0.5% release number. I think that would be safer in a lot of ways, and the direction of the market will be more predictable if we get those releases. So with that in mind, 13 minutes we'll be looking at this news together, and we'll wait for the release. If we get better than 0.1 or worse than negative 0.5%, then we'll look at to see if we have a corresponding initial spike in the direction of that release, and if we do, we'll wait for the retracement, and then we'll get into the market. So be back in about 12 minutes and we'll trade this number live. Okay, we're gonna get the release.
Down 0.8% below the minus 0.3% expected year-on-year. Also worse, minus 5.6 below the minus 5.2% expected. Index of services down 1%, also below the minus 0.8% expected, but a weak reading here in the UK GDP. Seeing the cable coming off here, 164.65, get in here, down 45 pips. seeing the gilts rebound from earlier lows, still in negative territory, down about 8 ticks, 115.61.
Okay, the number came out negative 0.8 from the expectation negative 0.3. Year to year also came out worse as negative 5.6 versus the negative 5.2. So it is worse than expected, and therefore the direction for this trade is definitely going to be a sell. We're going to wait for some kind of market retracement. Now, pre-market release was around just above the 165.05 area. So if the market comes back to around the 64.90, that would be a good entry to sell. So we're gonna stand by and wait for some kind of a retracement, and then we're gonna go ahead and take a sell. So wait for the market. Okay, well, I see the market is not really retracing much, so I'm gonna go ahead and take a 50% position here. It's gonna be a 66 entry. Let's see if we can pick up 30 pips from this trade. Alright. Yeah, because the entry is not optimal, it's about 20 pips away from our desired entry. Just gonna enter 50%. So if it goes back up to the 64.90 area, then I'll enter another 50%, and I'll be looking for the stop loss just above the 6500, 65.10 for the stop loss. So let's see if this trade could work out. Okay, everybody, it's about 5:38 right now. I'm just gonna go ahead and take profit on this trade. Instead of waiting for that 30 handle, I'm just gonna go ahead and take it, and I will put my stop at the entry level. So that's a pretty good 25 pips here, and I'll see if this trade would work out more all the way until 11 a.m. in the morning. I think there's a lot of potential for it to keep on going, but remember, market cycle around 6-7 o'clock we could see some reversal. So I'm just gonna go ahead and take profit on this one. You know, guys, take some profit as well, so if the trade goes against us, you know, you won't lose this 20-30 pips that we're looking at right now. Okay, so it is 20 some pips with this trade. 27 pips actually I was able to pick up, and it's about an hour after the news release. Pretty much we didn't have to face any kind of drawdown, so it's one of those good trades. And for the purpose of this video, I'm going to close this, but there's a definite possibility that this trade could go down to the 160-300 like we're seeing here, about another 100 pips of possibility. So if I were still in this trade, I will definitely want to hold it out until at least the 6400. So that's another 30 pips from now. Hopefully you'll learn something from this video, and you know, we don't have to really fight for that spike. It doesn't matter because there's enough movement for everybody to make money. It really does not matter much, you know, we didn't pick up the initial drop, the 50 pips or something initial drop, because there's a lot of room here for us to make more money. And even at the entry that we're seeing right now, there's still more room for it to drop. So just keep that in mind. News trading is all about following the market sentiment at the time of the news, and sometimes they're not clear, but in today's case it's very clear. Okay, this is Henry. Guys, have a good day and a great weekend. Bye bye.